Stacy, can you hear me? Stacy, can you hear me?
Yes.
All right. Can you see my screen?
I see your screen and your little picture of City Hall that apparently is your new profile picture.
You see it now?
Now I see you.
Okay. Oh, Connie.
But I can see my messy house in the
You
background.
need a link for finance? Oh, Connie. Let's see. She doesn't have the link. I'm going to mute you real quick.
Okay.
Mute.
Do you still have me muted?
You're not muted. Sorry.
Oh, okay. Did you see my email with the question about incentive payments and whether or not we would have to keep making those?
I did. I don't know the answer. Oh, you're gone.
Andrew Hartley.
Hey, David.
How we doing, my man?
All right. Can you see us?
I can see you in the top right corner. It says we are live and recording.
You got it. Connie is, I may have sent it to the wrong email address for Connie. Hold on.
I'm back.
All right.
Hey, Stacy.
Hi.
Right now it's just me, David, and Stacy. And I'm resending the link to Connie.
Yeah, make sure that she can see the password. I had to go into like other notes because I did it from my phone to see the.
Really? Yeah, usually if you click the link on the email I sent you, it already has the password built into it.
Oh, well, I didn't because I was copying it from my phone.
Yeah.
Good morning.
Good
Morning, Mayor.
morning.
Morning, Mayor.
We got everybody but Connie. I just had to resend the link to her, but once she joins, I'll switch us back over and we'll all see each other.
All right.
Connie, can you hear us?
I can hear you. Can you hear me?
We can hear you. We can't see you.
Okay, hang on. Let me start my video.
Yeah, we can't see David either.
Huh.
Now,
Hang
can
on.
you see me?
And see you, Connie.
I see Tom. I see
There we
Andrew. I
go.
see David. I see Stacy.
Hi.
All right, we're all here and we're broadcasting and we're recording.
Okay,
Good,
sounds
good.
good.
So
How's
Andrew,
the budget coming?
Andrew, you notified the press of this meeting, is that
I
right?
did. I sent Mike. I copied Mike on the invite. So if he joins later, I'll get a notice.
Okay. When you say we're live and recording, are we Facebook live at this point?
We're on YouTube.
We're on YouTube right now. Okay.
And
Then
that is a technical requirement of this new video conferencing capability. So
well, since this is a committee of the council, we are subject to open meetings and open records. So we've done this entirely correctly. A called meeting of the Georgetown City Council Finance Committee. Connie, David, thank you all for being able to tune in with us. What a handful of things that we'd like to accomplish with you today, more than anything, if we can just have a conversation about what some of our circumstances are today.
Okay.
And what we're anticipating and some strategies about the way we might be able to move forward. Andrew, you sent a pretty good Word document yesterday afternoon, and you asked me if you wanted me to have you send that out. Do Connie and David have that document yet?
no.
Okay. For the two council members, Andrew just summarized some things that I think are kind of helpful. They're known.
I can
But-
email it now if you want, by the way, while you talk.
Yeah, although the device that they read the email on might be the same one that they're doing this.
Good
It'd be
point.
fine
No,
for
I'm-
me. I've got my computer right here.
I got mine too.
Good. Then we'll go ahead and email that to you. I'm doing the conference on my computer and looking at this document on the phone, but we know that this COVID-19 incident is going to have a really critical impact on our revenues.
Mhm.
It started immediately, and we're really going to see the impact in the fourth quarter. And we just listed what some of those obvious ones are. The layoffs are going to reduce payroll taxes and business closures. They'll be either reduced or delayed net profits, reduced or delayed sanitation revenues because there'll be increased utility delinquencies. Chase is already seeing that. As soon as we announced that we would not be doing cutoffs, the delinquency rate started to skyrocket. We'll see reduced revenues from building permits. We'll see significantly reduced alcohol tax revenues since the bars are closed. Kentucky League of Cities has just given us some vague estimates that we could see revenue losses exceeding 25%. A lot of national economists I see are painting some pretty strong parallels between the 2006 to 2008 recession and what we're seeing today. So far, all the federal legislation that has passed has been to the benefit of large cities. We hope that something comes for smaller cities, and maybe that'll come from the governor, but we don't know any of that yet. You'll see Andrew listed some positives. The General Assembly did lock our CERS contribution rates for 1 year, and that'll save us in the coming budget cycle around $800,000. So that's one positive we've got to work with. The other thing is Andrew and I have talked about this a lot. Everybody's in the same boat. A lot of cities and a lot of counties are closer to bankruptcy than, I won't use that word, but they're closer to distress than even we are. So cities everywhere are in this boat, and the General Assembly's got to do something to help us. We've got to stay the course until we learn that information. And hopefully the stimulus packages already passed will help the economy recover once that assistance becomes more widely available and more widely understood, especially the PPP loans, David, the Payroll Protection Program loans.
Yes.
I know Central's seen just a huge influx of those PPP loans. I'm sure you have too.
Yes, sir. That's correct.
So the way we think we get there is, these are my thoughts, and I've shared them with Andrew quite a bit, and I believe he and I are on the same page. We think we have to establish a level of service below which we're not willing to fall. And those will primarily focus on public safety, those essential positions that we have that we acknowledged in our last financial analysis. But I think if we passed a budget that truly matches our current revenue, Stacey, it'd be a nightmare. We'd be laying off people. We'd be cutting benefits. We'd be devastating our local situation. So our hope is to avoid that at all cost and to be able to maintain a minimum level of service, especially with public protection and essential employees. Stacey's been working on what is essentially philosophically a continuation budget, even though continuation budget means something, and that's, we're not using that term legally. I'm just saying that the idea of maintaining our current police and fire levels, maintaining our current benefits for employees, understanding that that presents us with a deficit situation and that we will start burning cash reserve.
Where did
And
David go?
I'll be back. Somebody was trying to
Back.
call me.
Okay, gotcha. Sorry.
We can still see him, so he can still hear us.
Okay.
We know we're going to burn through some cash reserve, and I think we have to determine. Stacy's been working on helping us figure out what our burn rate will be of that cash reserve, how fast we're going through it. Stacy has calculated that we thought we would have 9.8 million in reserves at the end of June. But we now know that we're probably going to eat some of that reserve to get from now till June. And Stacy will work on quantifying that for us. This may even be a situation, David, Connie, where we, at some point, to maintain a minimal level of service, even have to consider borrowing money on a short-term basis until we can begin to see a recovery, and our income will lag the recovery since we're taxing that activity. So just philosophically, we wanted you to know that that's our thinking right now. We think our spending is going to exceed our revenues, but we think there's a level of service below which we really shouldn't go. Andrew, is that an accurate summary of what we've been trying to? You're muted. We can't hear you.
Okay.
There.
Sorry about that. I think that's accurate, and I just wanted to say that the document that I sent you all, I threw together very rapidly. It's by no means an exhaustive look at what we're talking about, but it summarizes our situation today pretty accurately. I don't have anything else to add other than I'm getting the sense from what I'm seeing at the national level, and for example, what we're getting from our congressman, that today they're thinking on helping us recover will take the form of some kind of deferred interest-free loans, or some access to loan funds that we wouldn't otherwise have. But in terms of actually giving us money, today that is not in the picture. Only cities of 500,000 or above are going to get any kind of direct allocation. The state will get some allocation, and it's unclear whether they will allocate any of that money to smaller cities. But even if they do, I'm going to assume that it's just a small piece of what is really necessary. And it seems like right now all the relief that we're seeing is for individuals and small businesses, and even the relief that's going to big cities is limited to actually compensating them for costs of responding to the virus rather than lost revenue. But that I've had conversations with the League of Cities, and that is going to have to be a conversation at some point, because like the mayor said, every single city in America is going to have the same problem. I suppose there's some that don't rely on the economy to drive their revenues. The folks who just get property tax revenues may be largely unaffected, but we're essentially talking about dramatically reducing our revenues, at least temporarily. And unless we just want to start, laying people off or cutting things, we're going to have to see this as we have some need to temporarily replace that revenue that we lost, and spread it out over time. I think that's probably the right way to think about it, but I could be wrong. We're in the early stages of it. we know for certain that there's going to be an impact, an immediate impact. And what I said in my summary was economists are not predicting what's called a V-shaped recovery. And that would be a serious dip and then an equally quick an equally quick recovery. Instead, we'll see a serious dip and then a slow recovery. Whether that recovery is over 6 months or over 2 years is not clear, but it won't be, in 2 months from now, our revenues won't jump right back up to where they were. That's my understanding. I mean, I'm not privy to any more information than anyone else is. It's just from my, reading of the tea leaves.
The tea leaves.
Yeah. I mean, just from reading, blogs and websites and economic studies and things like that.
So when you're talking about borrowing money, I'm sorry, David. When you're talking about borrowing money, I remember back when I first got on council, remember we applied for a credit line but never used it. Is that something that you're talking about, Mayor?
I'm not sure what form it would take, but yes, something like that, Connie. And hopefully, like Andrew said, if there are low interest loans from the government that may or may not be forgivable over time and might have low to no interest rates and
Deferred
very favorable
payments.
terms for us. I think we want to wait and make sure about what they're going to offer us or make available to us. But yeah,
Right.
that concept.
Yeah.
I don't know how we could cut. How can you cut people? I mean, you haven't hired anybody in like forever.
Yeah, that's really we hit this in a really odd predicament, Connie, because we know from our financial analysis that we're very thinly staffed.
Right.
And could actually use more head count. We also know that we're at a disadvantage on salaries right now, just in some key areas. But we got to play the hand that we've got as
Right.
well as we can. And one thing I hope is resonating with our first responders is, I know they're disappointed that we've announced that we're not going to consider any budgetary changes until the economy gets corrected. So I know they're disappointed about that. But what I hope they're beginning to realize is how nice it is when they work for somebody that every 2 weeks you get a paycheck.
Right.
And you maintain really good benefits, because we're seeing so many Americans that have just been completely displaced, and entire families where mothers and fathers have lost their income and lost their insurance. So the fact that we work for an ongoing entity, I think is not lost on me, and I hope it's not lost on others. Stacy,
Exactly.
we're working with Scott to determine how rapidly revenues are dropping.
Right.
But Stacy, how much of our cash at our current rate do you think we might burn through prior to the end of this budget year?
I mean, if you take our budget, we've got around a $25 million, I think, budget probably. So we're looking at a fourth of that being seriously, in jeopardy. So you're looking at maybe 6 million. If the 25% revenue loss is accurate, then you're looking at potentially another $2 million loss on the last quarter. Now, property taxes, that revenue obviously won't be affected. That was all mostly collected up front. But payroll taxes will obviously be affected. Net profits being due in the third quarter, like you said, may have reduced payments or delayed. I'm assuming that they won't file until at least July 15th, probably when the federal deadline has been extended to.
Yes.
So we're several months out in knowing exactly how our net profits might be affected from that. I think all of our franchise fees will be affected. Utilities, if people aren't paying the bills, I'm assuming we won't be getting our percentage of those bills from KU, Owen, Bluegrass, potentially, Kentucky American Water, possibly the garbage franchise fees. I'm not sure. So I think there's a chance that our franchise fees could all be affected by those delayed payments. And the other big account that we look at typically, of course, is insurance premium. That would be the one. I don't know on that one, especially since it's kind of self-reporting. I would think most likely that wouldn't be hurt too bad, but we're getting around how close to probably averaging 700,000 a quarter on insurance premium. So, a fourth of that would be close to $200,000. But I don't know if that one will be affected like the others. But obviously, payroll taxes will be the biggest. We'll see part of that impact coming into Scott here by the end of this month. Anybody who files monthly or quarterly for the first quarter, but there will only be 2 weeks of March that would have probably been significantly impacted by that. And I'm not sure how many of the industrial companies, I don't know what all of their timelines were and what all of them did. And we know what Toyota did because that's made headlines, but I mentioned to Andrew, might want to, I don't know if Jack has talked to, I don't know if Jack has talked to any of the other companies in town where we know what they're doing or what they have done as far as laying off employees, which ones are getting paid, which ones are not getting paid.
Commonwealth
but we'll see
Tools
the biggest.
Yeah, Commonwealth Tool closed theirs, but they're still paying their employees, just regular
Okay, and I
salary.
know Toyota laid off all of their temporary help permanently.
Yep. Mhm.
Well, I guess not laid off, they fired. And then hourly
That was
workers,
18.
at some point,
Yeah.
hourly workers were going to have to choose to use paid time off or be unpaid. Most
Right.
salaried positions are continuing to be paid at Toyota. And then May is when we'll see the biggest impact because obviously we're going to have a full month of shutdown in April. And when those monthly payroll returns come in May, I think that's when we're going to see the true impact and know where we're at. And one thing I had mentioned to Andrew via email this morning was I don't know how the incentive comes into play here, if that's something we have to for the month of, obviously Toyota's fiscal year ended March 31st. And usually in February and March, most of the time we're not even paying the incentive payment because we've already hit the 2.5 million for the year. And I can verify that with Scott. So April would be the start of a new fiscal year. And of course, we're starting it already with a low payment. So I don't know if we would have to continue those incentive payments during this time or not, but that's something we might want to talk to Scott about.
Yeah, we the way Toyota pays those through the Revenue Commission, we receive fairly large payments, or they hold fairly large payments that we don't get for 10 months. And it pretty much satisfies the $2.5 million max during those 10 months. So every year we've had 2 months at the end of Toyota's fiscal year where we didn't have to make incentive payments. We'd already maxed out our contribution for the year. So you're just not sure if we'll have to restart them, right?
That would be my question for Scott. I don't know. Obviously Toyota is having revenue issues from the economy. So it's not that we want to penalize them, but clearly I'm sure their staffing numbers are not, I don't know if their staffing numbers are still considered whole when the employees aren't working. I'm not sure. They haven't laid them all off.
Probably
They're
more of
still
a
on staff.
than a staff question. I mean, we're talking about whether they qualify for the program, not whether we're gonna
Yeah.
see whether they're gonna make the payment.
So it may not be an option. It was just something I thought about, that if we're already getting greatly reduced, but maybe we still have to make that payment. I don't know.
There's a lot we don't know. But we wanted just to get your all's feel for our effort to try and keep a basic level of service, even if we have to burn through a bunch of cash to do that. And just if you all were comfortable with that approach, or let you start thinking about it for another conversation.
I appreciate the I guess the budget roadmap that you all put together. That's good information, and I know it's fluid, and like I said, we just don't know where we're going to land on this thing. Mary, you mentioned the that Paycheck Protection Program, and I'm trying to make people aware of that as I possibly can, because that's good for our community, and if it's good for our community, it's good for our businesses, it's good for the city, it's good for the county. Ironically, I was speaking with Philip Pratt yesterday, and I mentioned it to him, and he wasn't that familiar with it. He'd heard the PPP program, but he just wasn't that familiar with it. I said, Philip, you need to check on that. You need to probably apply for it. And we ran through some numbers while we were both driving, but we could do it in our head. We just kind of rounded some numbers, and it was a significant amount of money that he would potentially be eligible for. And he said, here I am, I'm a state representative. I didn't even know, or understand this program. And a lot of people don't, and it's going to last for some time to come. But I think we need to continue to make an effort to the community to let them know about that. Because again, I think every little bit will help. There's not going to be a silver bullet or a magic bullet, but, and Connie, you've heard me use this term before, but sometimes in business, I take a shotgun approach, and you've got all these little pellets going out there, and they all add up to something maybe significant at the end of the day. One of them by themselves might not be enough to really significantly help, but when you add them all together, maybe they can. So that's one thing I'm sitting here and have been thinking about. You've mentioned some things in the email that you sent to us, and and I'm thinking back to 2008 and 2009. And Mayor, I know you were obviously involved with the county, and I can't remember which business you were with, if you were with the college system or if you were with the bank at the time, but we all kind of figured things out as it went along. We didn't really necessarily have all the answers right at the beginning of the crisis, like right now. But as things moved along, we did figure things out, and we made decisions as we had to make decisions.
Right.
And sometimes, I'm sitting here today, and what might make sense today might not make sense next week. We might have to take a different step next week that didn't seem like the step that we needed to take this week. So you have to be able to adapt and adjust and be flexible. And I know that we all can be, and we will be. I know that. I feel good about that. And Mayor, I appreciate your leadership and putting this together, and the comments that you've made. And, you've said it, we're all in this together. This is a horrible situation, but we're all in it together. And I think Georgetown's going to be better positioned to come out of it than probably most communities. I don't mind thinking about the 911 fee. That was something that we were talking about early on. And, maybe that's something that we need to give some serious consideration to right now, that could be done in a fairly rapid manner. The other things that we were talking about, that the timing isn't right. It's just not right. And I get that. But I would ask you all of you, to think about the 911 fee. And maybe that's another one of those, in the shotgun approach, maybe that's another one of those pellets that could have a somewhat of a significant impact on the number for next year, for example. But I'm going to continue to think of things like that. I know the insurance, that's something that we can't touch right now that won't have any impact for quite some time. So there's no sense, really stirring the mud on that one and getting people focused on that one right now because of the timing. But maybe there's some other things, maybe a freeze on hiring new people. I mean, as short staffed as we are, I don't even like to think about it. I hate to even talk about it. But the reality is in 2008 and 2009, we had to do some of those things. And Mayor, you and Stacy and Andrew may have a better handle on that than Connie and I would. But I think we have to at least think and talk about those things. And I don't know where that would be. The police department, I can't imagine. But maybe I just don't know. And I'm not even making a suggestion. I'm just saying, hey, maybe that's something we need to think about.
Well, in
But
that letter, this budget thing that Andrew sent out, he's got in there, freeze hiring all positions, saving through attrition. It could be devastating to already understaffed police and fire departments. No raises,
I put
only
that
critical.
just to note that it is an option that cities are doing, but it's painful. I mean, it's real painful, particularly when we're understaffed already.
I totally understand.
I know, I get it too.
And that is different from not hiring new people. I mean, I think that's already an assumption that we're making, is that for the time being, we won't add any new positions, but not rehiring the ones that retire is a different animal. And I'm not sure, we don't know what the impact of that would be, particularly over the short term. But it is, I only put that on there because it is an option that cities are exercising right now as a first step.
Yeah.
It's almost on that one. Everything's got to be on the table for what if conversations. But the fact that we still have 40 less employees than we did in 2008, and we've never recovered from that. If we do that again after this much growth, I think we're dipping below a minimum level of service that we need to decide.
Yeah. Mayor, I totally agree. I can't imagine that 40 number coming back into play. But is it 1? Is it 2? Is it 3? I don't know. And that's, I'm not even proposing. I'm just thinking, like you just said, that's something you all have to analyze and decide on.
But
and I'm sure you will.
I do agree with you that everything's got to be on the table. And then you evaluate the risk reward or the cost reward ratio of doing that.
Yeah.
So I think that's an honest approach, David.
Yeah. And then you said it earlier, I mean, if we have to go get financing, set up a line of credit, whatever the case may be, we were all very proud of ourselves when we were funding the 911 system and, splitting the cost of the county. I mean, that was a big deal. And we talked about financing that, and we chose not to. And I'm glad we chose not to. But, here's another conversation we have to have. If we need a line of credit, so be it. We can look at that as well. So
we actually have, I referenced the statute in the thing I sent, but we actually have statutory authority to issue bonds to cover the costs of an emergency. And I'm going to make the argument that includes lost revenue due to the emergency.
Yeah. So one of the things we're doing for some of our customers here at the bank that have been impacted, and Mayor, I know you knew Central Bank certainly doing this as well. I can't imagine a bank that's not doing this, but they're working with their customers and maybe allowing the mortgage payments or loan payments to be interest only, perhaps, or even deferred and pushed on down the line. And Stacy, maybe that's something that we can, or Andrew, we can talk to, the folks that have our loans about, see if that's even an option for some deferments.
I believe I'll need to double check. I think obviously KLC holds, I think, those variable rate ones. I'll have to look and see if the bills actually get paid to maybe US Bank, but I think US Bank is who accepts our bond payments as well.
Okay.
I think the best news is, I think what we're really all saying is we have options in terms of for getting cash. We have liquidity.
Yeah.
We have very low debt, and we have the ability to get funds should we need them. And I think the other piece of good information is it's not like all of our revenue is going to go away. It's going to be impacted, and it's going to require us to dip into reserves. But we have very strong reserves. I think really what we're saying is the right thing to do is have like the mayor said, a continuation budget, and a wait and see approach. We know things will get better. We don't know how long, but we're at a high level of certainty that we can weather a substantial period of downturn with our reserves without impacting our major services. And then if the need arises, we have plenty of ability to borrow to make up the difference. And I'm hopeful that in the next year that there are lots more options that like the kind of options that we've discussed coming down from the federal government, interest-free or deferred payment loans or forgivable loans or whatever. So that this really just becomes a matter of waiting rather than a matter of taking drastic actions. I think that's where we are. I know that's where we are today. I don't know where we'll be in 4 months, but I think that we don't have any reason to panic and start pulling out stops. Maybe you have more to say about that.
I think we're getting on the same page. And David said it pretty well. This is a situation we're going to have to manage our way through and manage it kind of day to day and week to week based on the information we have at that period in time. This whole last 6 weeks has been so hard for us because, as you all have said, a conversation that we had last week is meaningless this week because things have changed so dramatically over this. And so I think this is going to be a combination of close management and faith, and some blend of the two. If we all talk about it well enough, we'll manage our way through this with an understanding that we're just going to do the minimum that we have to do to protect citizens and save as much money as we can until whatever the recovery looks like, we begin to be able to define it. So I think this conversation for me has been really helpful, just to verbalize some of this stuff.
Sure.
And,
Right.
And kind of reassure each other that we do have a path through this, but it's going to be an unusual path for us.
Well, we're open and just to ourselves, I'm at the office right now. We keep the doors locked. We don't let people come in. But we've probably collected almost 80% of our rent for this month, which is really good. So
That's great.
don't know what May's going to do.
I was going to ask you all, since you all know a lot about the residential and commercial markets out there.
I think commercial's impacted a little bit more, don't you, David?
Yeah, we've, with the ones that we have experience with in front of Kroger, for example, most of them are closed or shut down. Some of the restaurants are doing the carry out, which I guess most are. But we've worked with them and we've done deferred payments for most of the businesses out there. And the way that works is we typically do 2 months worth of deferment. So you take 2 months of rent, for example, and whatever that amounts to. Let's just say that was $3,000 per month. So that's $6,000 for the 2 months. And we will divide that by 6 months. So that would be $1,000 a month that will add on later on down the line onto the back, somewhere on the lease at a later date. And we're working with Tom Marks in Lexington County, just familiar with Miller, Griffin, and Marks.
Mhm.
and they're representing tons of commercial businesses here in Central Kentucky, and that's the way it's working for most of those as well. They're working to do the deferments. So anyway, that's the extent of it.
Yeah.
Property's still moving. I was looking at Elbar today.
Mm.
Still a couple of listings here and there. We have to be careful. I showed property last Friday. It's actually over there in Bevan Lane, that psychiatrist. I've got somebody for that. And, we kept our distance and stuff like that. But, and I have several closings lined up. None of those are going away. Everybody's moving forward. People are still coming in, asking to look at property to rent. People got to have a place to live. So for right now, and I guess everybody that can get that stimulus package and help pay their bills with it. So I think we're probably going to see the biggest impact next month. This month, not so much, but I think in May. But now Toyota's supposed to go back May 4th. I've seen that on the news.
Yes. Well, all but 1,800 of them.
That's a huge impact.
Yeah, that one is still hard to wrap the mind around. But anyway, Stacy, are there questions in terms of budget schedule that you think we need to talk about?
I mean, for
we're-
me
we're-
personally, I'm sorry.
We're in the twilight zone, but we still have a budget ordinance that we're
Yes.
supposed to be following. And
Most of the departments, of course, they know we've not sent out an official communication, but the departments know that even though we've asked them to go ahead and do their request as usual, they know that we're working towards a slim budget. And my goal would be within the next couple of weeks to get you all what that bare bones budget might look like. I'll go ahead and plug the department request into their column like I usually do, but I'll kind of just skip on over to the mayor's proposed and do a bare bones. And if they've asked for something that's critical, we'll talk about that separately about adding it back in. But obviously the biggest thing is going to be, I feel like it's a little easier to possibly predict this last quarter of revenue because we know what's happening right now. It's a little harder to predict how things are going to recover past July 1 into the fall, hoping there's no second surge
Right.
and all of that. So I think the biggest thing I'll need help with and input, me and the mayor and Andrew will have to work on is projecting next year's revenues. I think
Sure.
that's going to be even harder
Yeah.
than
Yeah.
projecting this last quarter because we don't know how long that impact is going to last. But other than that, I'm going to go with pretty much payroll, employees being what they are today. Thankfully, CERS rates will be what they were today. I'll kind of plug everything in status quo. I'll pull out any of the one-time projects that we may have funded this year. All of that will come out and I'll get it as bare bones as I can. And hopefully in the next week to 2 weeks, I can get that out to all of you and we can see where that puts us and we can start talking about any tweaks that need to be made at that point.
When we were talking about the 911 fee at $6,
Yes.
that was around $1 million, wasn't it? Was it 1 million, 1.2?
Like 9 something.
Yeah, it was
It was 9
close.
something. Mhm.
I
No,
think the
I'm
only, yeah. I think the
Yeah.
timing would be the only concern with it would be if, I know we had talked about, I think, putting that on the water bill. Obviously, right now, people aren't paying their water bills, so it would be a timing issue of
I understand.
when it would be.
Yeah. Well, I'm
beneficial
just
to do
asking you
that.
all to think about it.
Yeah.
Maybe I'm not
Yeah.
saying it's in April, but maybe it's
Right.
June, and
Yeah.
for next year. But when you think about if that is $1 million and they're willing to forego, what was it, $800,000, I believe, on the pension. So all of a sudden there's $2 million right there, kind of out of a $6 million hole that it's
Yeah.
a third of the problem maybe that we've just kind of worked through a little bit.
Yeah.
Anyway, that's just the way I'm thinking about it.
Yeah, definitely. I think
and-
yeah.
that's the way we'll do a big picture kind of dashboard, David, to help us with these day-to-day management decisions.
Okay.
It's exactly the process that you kind of outlined. We're going to feel our way through it, take the new information we get, redevelop our thinking, and keep putting one foot in front of the other. Then I think what we'll try and get ready for you all is Stacy puts together this wonderful exercise for me where she just lists the changes to the budget. So we take an existing understanding with the budget that we've been on, and Stacy lists the changes that are easy for us to see pretty quickly and comprehensively. And then we can also give you an idea on how much that differs from what the department requests were, just as an exercise, so that you feel like you've gotten enough information from all your department heads that we can make these final decisions on.
Good deal. Mayor, thank you. Andrew, Stacy, Connie.
I really do appreciate it. Yeah.
Yeah.
It's just good to talk to everybody, see everybody, and, you know, we are in this together, going about doing our thing.
We all happy Good Friday and happy Easter. Everybody, and enjoy your social distancing this weekend.
All right. Likewise.
I'm gonna break a rule.
Bye, everybody.
I'm a rule breaker.
See ya.
Bye.